Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Kraus, Senior Vice President of Systematic ETFs at Hartford Funds, to discuss key themes in the ETF market and broader outlook for 2024. Brian, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me, Jill.
All right, you got it. Why is a systematic investment approach more beneficial in the current market cycle?
Well, I think there's a lot of uncertainty out there when you think about the upcoming presidential election, geopolitical risk, policymaker direction as it relates to interest rates. Investors are looking for some certainty, and I think one of the greatest strengths of systematic strategies is their predictability. We think that our systematic strategies will deliver really good outcomes over long periods of time, but we know that we can deliver very predictable exposures to the market that aren't going to change, meaning, we're looking to identify high quality companies trading at attractive prices that are starting to experience some market sentiment. That is a rule that our systematic strategies are built around. And so regardless of what's happening in the market, in the economy, in the world, and all of the unpredictable facets of those arenas, systematic strategies can be very predictable in terms of the exposures they're delivering because they're basically managed by a rule that doesn't change.
And it's interesting, speaking of attractive, you think international ETFs are more attractive in the current market environment, which is a new trend because the US really has outperformed for over a decade.
Yeah, I'd say that when we look at things like just price to earnings ratios or dividend yields, and we compare U.S. stocks to developed international stocks, the gap in valuation or the gap in yield is pretty significant right now. We know that the international stocks kind of always trade at a valuation discount relative to their U.S. counterparts. We know international stocks typically pay higher dividend yields to compensate investors for what is believed to be higher volatility than U.S. stocks. But the gap between the two is pretty pronounced. It's actually more pronounced than we've seen over the past 20 years. So just purely from a valuation perspective, we think international stocks are priced pretty attractively right now, and they're paying healthy dividends relative to their own history and relative to what investors can get in the U.S. stock market.
What headwinds and tailwinds do you expect to affect the ETF market in the coming year and your broader outlook for 2024?
Yeah, I don't think that the headwinds and tailwinds in the ETF industry are too dissimilar to what, maybe some headwinds and tailwinds just broadly, right? So I mentioned the presidential election in the United States coming up in the fall. The impact of the election is probably going to have less of an effect on the stock market than the months leading up to that election, because we know investors don't like uncertainty. There'll be a lot of uncertainty playing out as we kind of narrow the candidates down and understand who will be the Republican and Democrat nominees, and there's likely to be some volatility along the way as investors kind of grapple with that and understand what the implications could be for a Republican-controlled presidency as well as Congress, or vice versa. And so that is probably one of the larger headwinds that we see coming up. Secondarily, there's really two wars that are happening, and there's a lot of uncertainty and unpredictability around that. So whether they escalate, whether they spread out those wars and the impact of them economically. Obviously, the human impact is significant, but it's TBD in terms of the economic impact. And so I think those are kind of the major headwinds I would call out. That plus understanding, what recession, soft landing, long recession, short recession in the United States and Europe and elsewhere, just complete unpredictability and uncertainty. So I think those are probably the main headwinds, so to speak. The tailwinds are significant as well. I think that the market has largely been driven by a handful of mega cap information technology oriented names, and the market's been catapulted by them without significant breadth or contribution from the rest of the market. And I think that sets up as a really good opportunity for investors that are looking to diversify away from just those kind of large names within the United States that have done really well lately and invest deeper into the market, a market that, a number of names that haven't really participated in a market rally that we've experienced. I think that that's probably the biggest kind of tailwind that I would call out, is that there's really great opportunities to invest kind of moving down the cap spectrum, in addition to international ETFs as well.
Yeah, it's interesting, Brian. Even though geopolitical tensions have certainly heightened over this weekend for sure, the market, especially the oil market, is taking it relatively in stride. It seems as if the US market in particular is just focused on what's happening from a macroeconomic perspective and focused around rates for the most part.
I think that's pretty accurate. I think that people are looking to trying to understand when inevitably central banks will start cutting rates, and that's probably driving the majority of not only risk assets like we've been talking about with global equities, but the bond market as well. That seems to be at the top of everyone's mind, at least today, in terms of making investment decisions.
All right, Brian, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.